Euro is back with a vengeance, smashing through resistance. Talk on the street is it's U.S. inflation data. I don't know about that. I'm a technical trader. But is this the start of a full-blown breakout or just another head fake in a messy market? Let's break it all down. Welcome back, everyone. Tom here from Park Avenue Trading, your chief dealer, keeping you sane in these absolutely insane markets. If you like what you see, smash the like button, hit subscribe, share my videos far and wide. I want to build a huge trading community. All right, let's dive into euro dollar, which is currently trading right around 112.20. Why the spike? Well, fundamentals, all right. U.S. CPI came in softer than expected. They're thinking rate cut, but I don't think that's happening because I talked about M2 in previous videos. The money supply in the United States is really flush. I mean, after COVID, they injected so much capital, and the economic activity hasn't picked up quite enough yet to really spark the velocity of money. So it's like a double-edged sword. If the economic activity picks up, the Fed's got no real reason to cut rates. We're not really, the Dow Jones is doing quite well at 42,000, like 174 right now. So it's really hard to pick like the reason the euro spiked, aside from just hitting a super, like a weekly point that we had on the charts at 111.06. It traveled down to 110, like say 65, and then it quickly rebounded. There is resistance right now at 112.95, and there's upper resistance at 113.60 during short term. All right, so really what I think we have to watch out for is that the technical zone that we've been watching, the first, major resistance is right up over here at, 112.95. It's this top. So this is the high that really is in place that the euro needs to get through in order to get up to 113.65. I don't trade this current currency, actively. Be completely candid. I'm more of a cross trader, like euro yen and sterling yen. And I was completely wrong as far as what was going to lead the crosses. I believe that dollar yen was going to rally higher, and then the euro was going to come off, and so was sterling, forcing the crosses downward. Because I thought that the velocity of the euro and the sterling falling would be quicker than the dollar yen rally. Totally wrong. The crosses came off, but not anywhere near where my analysis thought it was going to be. And I have another video coming up on dollar yen and sterling yen in the next video I put out today. It is 10:51 in the morning on April 14th, 2025. So what are we looking at right now? I think that if I was going to add, and I'm going to go to the daily. I was going to go add the daily. Okay. So we have the 50-day moving average sitting right down here. Now, my belief, I don't use moving averages as far as because they're lagging indicators, but they're really good as like a measurement if you were thinking of the moving average as the mean of a bell curve. So when a market snaps so far away from the moving average, okay, it has the ability to kind of pull back down towards the moving average, which actually is sitting at 109.25 right now. So the euro, I think that the euro is still in a bearish tendency. It's got a bearish tone to it. It's not really rocketing. I don't think this is a bull breakout. I really don't. I think that this is a good opportunity to look for levels to sell it. Now, as it stands right now, let me go back over to the 6-hour chart. Let's go over to 6 hours. As it stands right now, the critical price for the euro dollar is like 112, right here, really, 112.12. So the critical price, 112.12, this level has to hold. If it doesn't, actually, let me see something here. Let me to a 4 hour. I want to get a better level. I'll close this, smooth that moving average down. Yeah, it's really 112.08. I'll go 112.08. Has to hold this level. 112. Right there. Hang on here. Let's bring this back up. Too much coffee this morning, man. I'll go 112.04. Okay, which it kind of cracked a little bit. So if this level can't hold, most likely the euro dollar is trading back down to 111.50. Now, if that goes, we're back down to the main support at 111.08. So this is the critical price right now. If it can hold this level and it can get above this top of 112.65, I think we're going to get the run to, I'm going to go 113.15. I'm going to go 113.15. This is, I don't want it. I don't want a ray. I want what I want. I want horizontal ray. 113.15. That's where I think we can go. If the euro can now get up through this top level right here, we got 112.93, 113, say 15 before it would react and consolidate or drop back down. If it breaks this level, okay, it's signaling a breakdown towards 111, say 45, 111.45. So that's what I got going on in the good old euro dollar. Now, you got to keep your eye out because right now the market's kind of in flux. We're in the middle, a moment where fundamentals and technicals, are fighting with each other. Keep your eyes on German inflation data later this week. If that comes in hot, the ECB may be forced to stay hawkish, which could push the euro upward. If it comes in and it's kind of like a little bit high yet, not really that hot, then they're probably going to cut rates. Because if we look at the German, if we look at Eurobund, right? Eurobund is basically tracking within these points right here. So we got, let's go up here, and we got the bottom right here. It's basically staying in between these 2 points. Market's waiting, the bond market is waiting for the signal. So if it comes in where they think that they're going to cut rates, this is going to re-rally and break through this top because bonds go up when the interest rates go down. So right now it's kind of in flux. So that's the other point that we got to bring out. So that's it for today's breakdown. Watch the euro bond. That's important. Keep your eye out for that German inflation data. If you like what you see, make sure you hit like and subscribe. Don't forget, share it with your fellow traders. Let's grow the community of smart, disciplined market operators together. And remember, you could always head over to Park Avenue Trading and get yourself a free ebook. And always, 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 as a short-term trader, enjoy the party, but dance near the door. Cheers.